I am freaking out. My nerves are shot. I don't know what's going on. I can't figure out when it's going to end. I got to know when it's going to end. I'm arguing with my wife. This is really bad. Nope, not talking about the stock market. Talking about a visit from our very part-time neighbors up the hill. They've got a ton of kids, a bunch of dogs. They're all very little kids. They're all running around all over our property, whipping up our dogs, making all sorts of noise. There's constant screaming. When these people come, it's always something. This go around, they've got a skunk under the house that apparently they're going to kill. Last time they came, or a couple of times ago when they came, they shot a deer off the porch. It is a wild, wild scene, and in all seriousness, they are fraying our nerves. The screaming that goes on, it's crazy. The stock market itself, what can I say? It's down. This is something that the market does. This is a very normal thing. This has happened, I don't know how many times in my 23-year career. It'll happen a zillion more times before I'm done. Same thing for you. It's happened a whole lot in your investing lifetime, and it will happen a whole bunch more before you're done. So to get upset is probably the wrong thing, which takes me to Jim Cramer. He went berserk, one of my bald-headed bosses. He went berserk on Erin Burnett's show. I've never seen him scream like that before, although I don't watch the show, so maybe that's a regular thing. But he has the ability to incite people to take action. And I think about the worst thing that anyone can do is to react emotionally during a panic and place trades. If your, well thought out, get defensive strategy called for you to sell because of something that occurred today, well, that's one thing. You set out a plan before you got emotional. That's fine. You're sticking to some sort of plan. Hopefully it's a good plan. But that's what you're doing, and that's different than seeing Cramer go berserk on the air and start selling stock. But just my 2 cents. I want to throw out a couple of numbers. This is things that I dug up for an article that I'm waiting to have edited at thestreet.com. Just a couple of numbers. On October 13th, 1989, the S&P 500 fell 6.1% from 355.39 when the UAL LBO fell apart. It was back above 355 on January 2nd, 1990, which was 54 trading days later. Asian contagion. The drop started from 972.28 on October 21st, hit a low of 876 and change on October 27th. That was 9.8% in 1 week, but closed back above 972 on December 1st, so just over a month later. Long-term capital. Let's see, the market was at 1186 on July 17th, went as low as 959 on October 8th, so that was a 19% decline over about 3 months. The market was back above 1186 on November 23rd, so about a month and a half later. September 10th, 2001, so that was maybe the worst one of all. The S&P closed at 1,092, hit a low on September 21st of 965. 11th grade math tells, or 6th grade math tells me that maybe that's 14%. It was back above 1092 on October 25th, so just a couple of weeks later, month later. This is a panic. It's a little different, but it's the same. This is what they look like. People start freaking out. They get emotional. You see stuff like what Cramer did on Erin's show, which then he came on during the Dylan and Maria show and was the voice of reason. I think he kind of took back some stuff. I couldn't tell because the neighbors were screaming so close and the dogs were barking at the same time that I'm not sure what he said, and I didn't bother rewinding it on the TiVo. But he certainly looked calmer. How about that? The point here is that this is all emotion, and it is exactly this time where you shouldn't be emotional. I write about this repeatedly. I bang on the same drum all the time. You have, hopefully, some sort of exit strategy. Get defensive strategy is probably a better word. Get exit implies go to zero, which I wouldn't ever do. But some sort of get defensive catalyst that you start to take action. Doesn't matter what's going on with financials. It doesn't matter what's going on with subprime. It doesn't matter what's going on with Bear Stearns. If the market breaches whatever it is that matters to you, you just stick to your plan. It hopefully is as simple as that. Because it is that simple, there doesn't need to be any emotion involved. Bad decisions are born out of emotional reactions, in my opinion. kind of how I view things. And so as a result, I'm just not emotional. It's funny, a friend of my wife's called, asked how I was doing the other day when the market was puking down, and Joellen laughed and just said, well, you'd never know the market was down. And that really is the truth. It's the stock market. It goes up, it goes down. I'll ask you this. Do you have more money today in your account than you did when the year started? Hopefully, that puts it in a little bit of perspective. Quick word about the financials. Bear Stearns, I've got a chart here that I'll put underneath the video. Bear Stearns down 25% in the last 3 months. Goldman Sachs down 15%. The sector spider, XLF, is down, I think it's 11%, eyeballing the chart. Thornburg Mortgage, so this is a mortgage REIT that didn't go out of business, is down what appears to be 8%, while the S&P 500, this is probably wrong because I don't know if it's capturing today's close. S&P 500 looks to be down 3% or whatever. But whatever it is, doesn't matter. The thing here, I guess, that I want to circle back to, and hopefully this is taken constructively, and this is something I've been writing about for a long, long time. The yield curve was inverted, then it kind of wasn't, and now it is again. An inverted curve is bad for financials. I've been underweight since I've been writing the blog, and then relative to how much exposure I have, about 3/4 of it is in foreign banks that usually are low beta. They all pay pretty fat dividends. There's no way that I would have predicted what's happened here with whatever the reality of subprime is. I don't know, but whatever it is, I never predicted it. I never would have predicted it. But I didn't need to predict it. Yield curve is bad for financial stocks. At some point, the curve will normalize. That'll be a little better environment. And certainly, that is a time to at least be equal weight and maybe be overweight. And then at some point down the road, maybe in the middle of the next decade or whatever, the yield curve will invert again. And then it'll be time to be underweight the financials. This is going to repeat over and over. Yield curve inverts, reduce the exposure. That was the important decision to make. I've written a few times about, for the last 18 months, doing a little better when the market falls and lagging a little bit when the market goes up a lot. That's exactly what's going on right now, and I think part of it is the simple, and there's no analysis there, so this means anybody can do it. Inverted yield curve, bad for financials. There's all sorts of things like that repeat. End of cycle, good for certain sectors. Beginning of cycle, good for certain sectors. This repeats over and over. And so hopefully, seeing this play out, and again, I'm not claiming to be right about why, because I'm not right. I have no idea. I don't need to know. That's the important thing. I just need to know that when this has happened before, it's been bad. Now something's going on, it looks bad. If I try and do an analysis, it will either be right or it's wrong, but it doesn't change the outcome in the market. And so hopefully, I'm conveying to you the extent to which I'm dispassionate about it, very, unemotional, just trying to apply logic to navigate through this. The market will find a bottom. Since it's a panic down, I imagine there'll be a panic up. And then I said this in an interview on Friday, that I kind of think will kind of drift a little lower, which is kind of consistent with my prediction for 2007. But again, don't care if that's right or wrong. I'm just trying to muddle through and add a little bit of value for clients in case we go down a lot, and be close if we go up. That's what I'm doing. Hopefully you're doing the same thing. Have a great weekend.